My name is Benjamin Gordon. I'm the founder and managing partner of Cambridge Capital. We invest in and advise great companies in transportation, logistics, and supply chain technology. And it's my pleasure to moderate this conversation and really begin a dialogue around what's new and exciting in and around the world of supply chain, in particular, as we look at what's happening here in 2021. So what I'd like to do is I'll give our esteemed panelists an opportunity to introduce themselves. And after everybody shares a little bit about themselves, we'll set the stage and dive right into some of the topics. I'll ask some questions to get the ball rolling. So Jeremy, Jimmy, Casey, great to have you guys here. Casey, why don't you start us off?
Sure, I'll go first. I'm Casey Adams. I'm the president of Visible Supply Chain Management. We do everything on that e-commerce supply chain between customs clearance, freight, small parcel activities, as well as pick and pack activities. So we get to see the impacts of the various things happening in the supply chain world in a lot of different spheres and on a lot of different levels.
Excellent. Thank you, Casey. Jeremy, want to go next?
Sure. I'm Jeremy Bodenhamer. I'm the CEO of ShipHawk. ShipHawk is the premier packing and shipping software for ERP connected companies. We work with high volume retail, wholesale, and e-commerce companies to lower their packing and shipping costs so they can compete on a level playing field with the e-commerce giants.
Excellent. Thank you, Jeremy. Jimmy, how about you?
I'm the Jim Cochran. I'm the CEO of the Package Shipping Association now. My background is over 20 years working in e-commerce. I was with the Postal Service. For 40 years, I was the CIO and then the Chief Marketing Officer and Chief Customer and Revenue Officer. So pretty good background. And my members are probably some of them are on this call. And also, but the biggest players on both the software side, the integrators, package shippers, obviously retailers, and what we try to do is make sure that the network exists to serve customers. And so the topic today is very interesting to us because we can't do it again.
Absolutely. And so, Casey, why don't you start and tell us a little bit about Shipageddon? What is Shipageddon?
Shipageddon is defined as an imbalance between parcel supply and parcel demand. So the final mile shipping that gets to people's homes here in the United States can periodically, just like any business, fall into periods of supply and demand imbalance. And when the supply gets particularly low compared to the demand, for a number of years now, we've talked about this potential outcome of a Shipageddon, where the demand is too high and parcels go unshipped. Usually it's talked about in the context of the holiday season, where large numbers of people, increasingly year after year, are having their Christmas shipped to them or shipped to their family members. As a result, you have some surges during the year of what we all call in the industry peak. During that peak period from late November into early and middle December, you have extremely large parcel volumes every year. And those parcel volumes are crucial that they arrive on time, because without them arriving on time, the grandkids don't get Christmas or whatever other horrible outcome might occur. So as we watched that over the last decade or so, we found that this Shipageddon event is a narrowly averted disaster on the best of times. And as we reached into the COVID-19 period this last year, and we watched a high water mark of parcel volume start to happen as early as April, we knew that the peak period in 2020 had the highest likelihood we'd ever seen of a true Shipageddon. Parcels left on the dock, parcels that don't go to the correct destination in time for Christmas. In fact, it's kind of, in my mind, if I were to break it down, I'd say Shipageddon is caused by a combination of secular trends, unusual high tide activities, and then some particular bad things that might happen. So the secular trends, of course, being the continued growth of e-commerce as a method of consumption here in the domestic US. High tide activity would be the COVID-19, which moved all of those things forward in time, 4 or even 5 years, depending on which economist you're looking at. They're saying that the e-commerce consumption rate went forward 4 or 5 years during COVID-19. And so therefore the necessary supply to meet that demand needed to be 4 or 5 years in the future on capital investment strategies, on technology, et cetera. So you had that unusual high tide, and then some strange action had to have occurred. And that's what happened at Shipageddon this last year. The strange action that occurred, in my opinion, and there were a number of different things that happened, but probably the biggest thing that created a Shipageddon-like activity was the vaccine launch. Having vaccines distributed during peak, while you already had a high watermark caused by a forward movement of consumption in a time of year where we're already seasonally impacted and right up against the margin of error on small parcel. All of those things combined to create Shipageddon at this last peak. There were a number of prognostications I was sharing with Jim and Jeremy before you got on this call, Ben, and those prognostications said that there might be as many as 7 million parcels a day during peak that didn't have a home. The reality, from what I can tell, is that it was somewhere between 9.5 and 14 million parcels that may not have had a home, but due to unusual efforts by the U.S. Postal Service, the regional carriers, and also by UPS and FedEx, I believe almost all of those parcels got a home. 95, maybe 96% of those parcels made it to where they were supposed to go on time. We could call that a Shipageddon averted, but from where I was sitting, it sure looked like Shipageddon in my warehouses.
Fantastic, Casey. Thanks for that insightful explanation. So is this a man-made disaster, or could this have been prevented?
Well, I suppose it depends on what components of it you felt you could prevent. I think there are some portions of it that couldn't be prevented. For example, I don't believe we could plan our capital investment to anticipate a pandemic. That seems like something that would be very hard to prevent. On the other hand, some of the things that drove the Shipageddon outcome were man-made. For example, individual shippers choosing to purchase products closer to Black Friday or closer to Christmas, that exacerbates the problem. The farther away from Black Friday and Christmas they go, obviously that relieves some of the problem. The willingness of retailers to use alternative carrier strategies and multi-carrier strategies, I believe, was a crucial component to averting a true disaster. And the U.S. Postal Service being willing to meet their motto of, rain and shine and gloom, or whatever the old slogan is. Jimmy will know it.
Rain, sleet, or snow. Come on.
Yeah, rain or sleet or snow. At the end of the day, the Postal Service stepped up, and the regional carriers stepped up to avert the disaster. So I think it was to some degree not within the control of the individuals involved. I would also say, though, the major national carriers not named the U.S. Postal Service, they made some business decisions. They were the right business decisions, but they also made the problem worse. UPS and FedEx, as early as the summer, we were seeing them go to particularly low margin clients. So they're largest clients, but with low margin per package, and also low margin service type, like their consolidated service types. They were going to those and renegotiating tariffs, pushing off volume and capping the amount of packages they would take. So that definitely exacerbated the problem. So to some degree, you could say that was a man-made part of the problem. And then I would say also, Jeremy brought this up earlier, the capital investment in the infrastructure that supports the small parcel network is not invested at the rate it needs to be invested at for the growth of e-commerce. And that's a choice as well. That's a business choice. But I think somewhat it's man-made, somewhat it gets outside of our control. And then it got exacerbated by some choices that were made right there at the deadline.
Excellent. Casey, thank you.
The fantastic e-commerce growth rates have conditioned them now to expect delays. And so they are now doing what I think is the right thing and notifying their customers sooner. I'm sure everyone on this call got at least one notification from some email list that we're on saying, hey, order early, right? So they're trying to take as much into their hands as possible. And I, for one, ordered my Christmas gifts earlier than I ever have this year, being an insider and seeing the writing on the wall. It was probably still late summer when I was starting to place orders. But at the end of the day, they're beholden to whoever owns the assets. And that's, a cyclical, investment. And that, as Casey was saying, those asset investments always lag consumer spending. Investors don't want to put money there until something like a pandemic happens and we see how badly they're needed, right? So FedEx and UPS have been adapting their networks for years as parcels have gotten bigger and bigger and bigger, but the bulk of the ecosystem has not. So that hurts those shippers more than anyone.
So Jeremy, do you think shippers understood what was happening along the lines of what Casey described, or was this a surprise to them?
No, they absolutely understood. If you think about it, I was saying that the shippers are the ones that are hurt most. Consumers will go elsewhere, right? Consumers have no problem. They judge carriers. They judge, and many times retailers, entirely by on-time delivery rates. Our only real touch point with the customer anymore is that delivery service. So if those aren't on time, if they're not as expected, that consumer will just go somewhere else. They might get upset in the meantime. I tell a story in the book. I have a download on the website of this direct-to-consumer company. It's a big name. And the head of customer success is a friend of mine. And the customer success team has no control over the supply chain. No control over fulfillment. They outsource all fulfillment to a 3PL, and that 3PL got way backed up. And so they're trying to think of what can we do to make it up to these customers because their orders are delayed. So they sent out in excess of 10,000 coupons for discounts as much as 50% off the next order. I mean, these are not small coupons, right? And the fascinating thing is, last time I checked in, less than 100 of those coupons were redeemed, which makes us believe that consumers completely abandoned that brand because the shipping times were slow, which is to a large degree out of that brand's control at that time.
Got it. And just building on that theme, so if you were a shipper, how did you react to these challenges? And equally importantly, what happens next time?
You plan better. You use more carriers. You augment with more carriers. I mean, FedEx came out with what I'm calling the success fee, right? You ship too much, you get penalized. You're too successful, you get penalized. We're going to charge you more, right? So there's a market out there for service providers who can mitigate this middle territory, this middle ground, and shippers are out there aggressively looking for them, aggressively looking for ways to better route packages, to more intelligently route packages, and to better communicate with customers so that's more predictable. And those are the things that are within the shipper's control. Great.
Now let's turn to the post office side. So Jimmy, this is your area of expertise. So tell us, what was the post office role in this Shipageddon?
Trying to survive. It was honestly, I mean, look, it happens every year, peak period, right? And they planned, but they didn't plan for 100%, a 50% increase. They went for the year before, they had 800 million packages. And in context, the daily volume triples, but they deal with it. And especially the last mile. Last mile, is very flexible. They'll put people out at 5 a.m. They'll put them back out at 5 p.m. They'll run 3 waves of delivery. They clear out the post office every day. It was the network that was the challenge. And one of the values of that is multi-carrier relationships, right? So everybody had some business, with the Postal Service, and that let them make the shifts. They don't have the ability like FedEx and UPS to turn it off. So they ended up with quite a bit of business. NMOs, non-compatibles, were a big issue for them, and so that was one piece that was a challenge because they don't have the technology to sort the non-compatibles and large, extra large packages. They like, as you know, the Post Service likes stuff like 5 pounds and under 10, type scenarios. So that was a challenge, and the pandemic was still hitting them pretty hard. I was explaining it to somebody. I found out one of the plants and they were backed up. Trucks were backed up a half a mile going into the site. And the challenge was they didn't have the forklift drivers because people were out on with COVID or quarantining because of COVID, because of a family member. And And they can't just put anyone on a forklift. They go through all this training and everything else. So, they lost it on the dock. They lost a little bit of the first in, first out. And it was just a sheer volume issue. They did their darndest. They worked hard. They delivered 7 days a week until 9 o'clock at night. And, I think they did deliver, the holidays under tremendous stress. I mean, it was a 400 million package increase over 30 days. That's a lot of extra packages. And once again, everybody has a plan, but I don't think you really couldn't adjust your plan. If you think about a pandemic, you knew it was going to be heavy. It was March, April, maybe May. But you couldn't go buy sorters at that point. You couldn't, even hiring people became really challenging in the workforce because of how much unemployment was out there. People were like, staying home. So, it was an interesting challenge, but I think they fundamentally stood up to it. And I'll tell you, I think the marketplace was pretty forgiving of them. They knew that they were doing anything possible, and they did bail out a lot of business that they didn't normally have. So,
yeah. Well, Jim, you said everybody has a plan. And I thought you were going to quote Mike Tyson. Second half of that quote: everybody has a plan until they get punched in the face.
Until they get punched in the face. Well, that was a punch in the face. When you're looking at volume that you never experienced before. 800 million was last year. That's a lot of packages, and they hit 1.2 billion. In the same period. So, and it wasn't just that there was just extra packages. If they were entered in the last mile, it was all network. The last mile was taken care of. Once again, a big company like Amazon that leverages that last mile, they weren't hurt as bad as other retailers that are going through the network. So, a lot of learnings from it. I just talked to them the other day. They've already purchased 58 more parcel sorters. They have leases on buildings so they can run the logistics separately. They learned from it, and like every company does, I think the part of it is this. The postmortem is great to learn out what happened. I'm a big believer in pre-mortems. All right, think about it right now. What could go wrong between now and December? And start planning for some of those things. Yeah,
definitely. Well, I want to come back to that question in a minute, but I do want to ask you, Post Office took a lot of flack in the media this past year, and Post Office worked really hard. I'm sure a lot of those criticisms were unfair, but fundamentally, how would you address that media critique?
Well, look, they whenever there's a change in Postmaster General, they go through structure changes, and they went through some structure changes with a new guy. He only started in June, in fairness to him, and then the election hit, and that was a big distraction. But they delivered on the election. That they hit at 99.9. Once again, a great performance there. They did make some adjustments in their network at that same time. Probably a little close to peak period for what I would think about it. But, once again, with the amount of employee availability there, I heard numbers that, some post offices were down 70% of their employees. I mean, COVID, they go to work, they work closely together, and then, things spread. And then one person gets it and everyone else has to, for 14 days, so. Under the circumstances, heroic work. I mean, once again, a lot of people got sick. A lot of people died. They really did deliver for the country, and not just during peak period, the whole year.
There's been a lot of talk around Casey alluded to the Evergreen ship that was blocking the Suez and is now finally unblocked. But there's a lot more behind it than just a ship. If you look at our inventory to sales ratio as a country, inventory to sales ratios are about as tight as they've been in recent history. So to put it in perspective, in 2015 through 2019, it hovered around a ratio of 1.4. Now it's down around 1.25. So things are pretty tight. So are we at risk of a disruption? Where do you guys think we are now? Casey, maybe you want to comment first. Where are we?
Yeah, I think we're still at risk, Ben. I'm looking at, like I said at the beginning, we touch a lot of different parts of the supply chain, and it's more interconnected, I think, than some people believe. We do activities within the freight world, as well as fulfillment related activities, and also small parcel. And right now, my head of my freight organization that identifies the pressures and the pricing pressures in that market. He sends out a weekly report. I just got it today, and it said that our tenders, both rejected and tenders accepted in the brokerage space in the U.S. currently from the prior week, are at the same levels that they were at during peak of 2020. So our freight is still right at that same capacity that created and helped to cause Shipageddon. We're shipping vaccines all over the country. Again, one of the reasons why we were close up against it during peak was that we were also moving all those vaccines. So anything right now could cause the domino effect. I know the storm that hit Texas, it also impacted my facility in Memphis, Tennessee. I have a Dallas facility. I have a Memphis facility. Both of them were impacted just last month by that major snowstorm that hit an area of the country not used to dealing with it. My Memphis facility was essentially shut down for a week, in large part because people's pipes broke and there was no water pressure. And no one could get anywhere because they don't have sufficient snowplow capacity. Now, during normal times, that wouldn't have been a huge impact. But given how tight that supply chain was already, that created a problem. So speaking of what you're saying, Ben, the inventories aren't there. So people don't have the ability to fall back on that cushion. And there isn't excess capacity floating around in the freight network. And there isn't a ton of excess capacity in the parcel network. So if you toss in something like, 5 to 7 days extra of delay by having to go around the southern tip of Africa, you start looking at some more negative impacts on supply chain, more potential for really odd outcomes in the retail world. So I feel like we're in a tight place still.
Not a good time to be losing the Memphis hub if you're FedEx, and Louisville had issues. And honestly, that was created a week of inertia trying to move stuff. Everybody got backed up around that. They're just too big to lose those big hubs.
Well, and Jimmy, you know as well as I do, the postal hub in Memphis is crucial for all the priority mail activity.
Oh, absolutely.
The Memphis hub for FedEx is crucial.
That's the one, yeah.
And there's a more than tiny UPS facility there as well. So there's a lot that got impacted there, and we were just digging out of that, and then the Suez thing happened.
Well, we haven't even talked yet about what's going to happen at the ports when that backup tries to get in and get processed. There aren't enough containers to begin with. There aren't enough spaces on the ships, and now we've got this glut of incoming freight. Just keep adding insult to injury over and over and over again.
Well, Jeremy, let's talk about it.
Yeah, I was just going to say, Ben, the first thing that flagged us that we were looking at a potential Shipageddon was the container imbalance that happened in April and May of last year, where everything turned back on. Retail got really exciting in the U.S., and empty containers were going all over the world. That's a really unusual situation to have boats carrying empty containers all over the place. But the imbalance in container caused by first the shutdown in China and then the huge retail demand in the U.S. was our first flag of, oh no, there's something bad that's about to happen.
Right. And so what happens next? Jeremy, I think this is where you're going to go. What happens when that first bottleneck reaches the next bottleneck?
Well, you see things like Costco having no toilet paper, right? Bottled water, paper towels. You see the ways of life that we expect, the things that we just take for granted all of a sudden become evident, right? And then on the supplier side, I see it like a hamster wheel, right? Ben, you're an investor, and tastes change from one moment to the next. I read this morning that roller skates are hot again. Been seeing them around the streets a lot lately here in Santa Barbara, right? So, I mean, we could be on a call in another few months, and writing letters in the mail is hot again. And we're talking about postal service. You needed to scale up their mail capacity. So it's so hard to predict the future. We all know that. But I think that what we're going to see is infrastructure investment and improvement going in a substantial way for the foreseeable future. And it's going to, in hindsight, it's going to look like a long tail of the pandemic.
Right.
Interesting. Well, let's talk more about what we think happens next. Jim, what are your thoughts about what happens next?
I think global trade there's still a lot of that moving on. And just as, at small package level, we talk a lot about containers, but there's never been more small package moving across border than is today. And I mean, just the, Asia, China and all the different players there are moving 1 billion packages a year from all the marketplaces. Everybody knows how to find Ali and Wish and eBay and Amazon. And so people, and there's not enough capacity there. You want to talk about a supply chain challenge. There's, you can't get enough lift to move it over. Stuff sits in China for a week trying to get to the US. And that's, with all the carriers, pretty significantly invested there. So, and that's a big part of what we talk a lot about, the containers of goods that are going to find their way into a warehouse. But I think there's stuff just coming across as small package at levels that's never existed before by my, 20 years working on it.
Yeah. Yeah. Well, let's talk about what it means for shippers. So Casey and Jeremy, when you talk to your customers on the shipper side, I'm sure one of the questions that they ask you is, what do I do? How do I make sure that my supply chain isn't disrupted? What do you tell them?
Casey, you go for it.
Oh, I go first. The first thing I tell them is look, at the end of the day, and anytime you have a supply constraint like we're looking at on the shipping side, that drives your cost up. So just know that's going to happen. Using some examples, containers right now are to move a container across the Pacific is about 400% more costly than it was a year ago at this time. Similar cost increase within a full truckload from LA to New York. That is filtering into parcel spend. And so as shippers and frankly, as e-commerce consumers, which we all are, we're going to need to expect cost increases in that percentage of the product's cost that is tied to supply chain. And as shippers, they've got to get their mind around that. That's a really tough thing. Your budgets get blown up. Your ability to predict your costs and therefore your margins, they get blown up. And so you have some real imbalances that are caused on the cost side. Another thing that I'm hearing a lot from shippers, especially I heard it a lot during peak, is, well, how do I fix it? What do I do? And unfortunately for them, the answer is not as much as you would hope. The carriers, there's a lot they can do to help alleviate it in the future. But for the shippers, they can do some very good basic practices, which procurement has been recommending for years, having a secondary supplier that you always keep in play. We call it a multi-carrier play. Use softwares that support that. Jeremy's software does a wonderful job of that. There are some others out there that are also quite good. But you need to plan for a redundancy because you don't know which of your carriers is going to trailer cap you and put you in a position where now you'll take any price just so I can get it in time for Christmas, or in this case, get it in time for graduation or whatever the next event is going to be that's going to trip the supply chain disaster. Jeremy?
Yeah. Well, and you guys know I'm passionate about this subject because I wrote a book on it. But I think the single greatest risk to the independent merchant is the size and power of these massive marketplaces and the closed supply chains that they're building that the independents cannot access unless they, sell their soul, right? If you say, yes, I will go all in on one of the major marketplace ecosystems, you can get their support, and that support is substantial now, all the way to the final mile, all the way to the doorstep from China. Or in many cases, we think the stuff's being sold here and it's being sold from China. So I think the independent merchants need to really take seriously their relationship with the U.S. Postal Service, their relationship with their regional carriers, with 3PLs. The network of partners that they have in aggregate is their single biggest asset. And if they're using things like Casey's talking about, software and everything else to manage that, it becomes very sustainable for a small or mid-sized company to do that effectively. But if they're acting like tomorrow's going to be like yesterday, I think they're in store for a rude awakening in terms of just costs going to the ceiling because they don't have the right partnerships, or they're not in the right ecosystem. So
you both raised several interesting points. One thing that I want to highlight is the ripple effects throughout the global economy. We've all heard about the bullwhip effect, where a small change in one place causes much bigger changes both upstream and downstream, or the beer game, where you get to model that. So are we entering into a new chapter where, like global warming, there will just be a higher number of high beta supply chain outcomes, where we have extreme ranges of either demand spikes that caused the Shipageddon last year, or supply spikes like the Suez crisis that just mean there's going to be more volatility in our world? What do you guys think? Jim, what do you think?
Well, I think it's yield. I mean, as I read a lot, you look at the earnings that come out. You do this for a living, Ben. They're all focused on yield management, right? FedEx and UPS, and frankly, the Postal Service. That was in the 10-year plan. He wants to make more money on the existing business, which is interesting because what we hear about is free shipping, right? It's all about free shipping. There's nothing free, and I've never seen the carriers. There's no sharp pencils out there cutting costs. Price wars. Everybody, they're firing customers, if anything, and so it's a weird time for. I mean, you're growing and you're looking for solutions, and you're saying you're hitting your tiers and you're not getting a lower price because they're just not giving it to you. You'd be happy that they're making you happy to take it off your dock, So it's a crazy time, and it's once again I think it's continuing right through peak. I hope they expand a little and flex out in peak, but I think that focus on yield management is an important one. If I was a shipper, I'd be diversifying. I'd look up, I'd make sure I had some eggs with the Postal Service and with the two big carriers, and I'd look at consolidators. I would look at regional players who are building up capacity, and honestly, I think a lot of people are noticing it. Once again, there's a lot of buildup in last mile people that are delivering, and it's so. I think there'll be some more alternatives, out there in the street doing delivery as time goes on, because there's opportunity out there.
I like Jimmy's point on yield. I want to lean into Jimmy's point on yield because I think that's where the solution lies. One of the wonderful parts about America to me is when there's an opportunity for someone to make money, everybody heads towards it, right? That's how you get a gold rush. And the upside to that is if the opportunity is being caused by a shortage of supply, which this one is, people gravitate towards the area that's coming up short, because that's where a lot of money can be made. And like Jim's saying, you're seeing that in use of consolidators and regional carriers. You're seeing companies like DHL, who has come back with a really aggressive play around their DHL e-commerce product. I thought it disappeared for a while there, but now it's back and they're pushing it out there. Pitney Bowes as a market entrant, shipping stuff all over the country as a consolidator. I know a lot of those regionals saw outrageous volumes, and now they're building capacity to field it the next time. So although, Ben, I think there might be a whipsaw in demand, and we may see some new peaks of demand in the future, I don't think that our basis is going to be as far off. I think we started off this one expecting 2020 volumes, and we got 2024 volumes. We got 2025 volumes, and then bad things happened. And I don't think we're going to see that on a regular basis. I think now we'll build to 2024 volumes, build to 2025 volumes. There's maybe a fortune to be made in small delivery trucks, but I'm not in that business, so I don't know.
Yeah, I think there's another element that we're not talking about. We're talking about moving things from all these great distances or diverse points, and I think there's going to be a lot of manufacturing and distribution that moves local. I think we're going to see more of a proliferation of 3D printing. I would not be surprised if there was the concept of assembly, and we were shipping parts to local places to be assembled, because those parts can come from more diverse or closer manufacturers. I think there's going to be some evolution in how the items are made, so that we can get them closer to their final destination.
You have a good footprint for fulfillment, I think, nowadays. Ship from store. Look at Target's done with ship from store. It's just a great rollout. I mean, and they've taken. Think about this: retailers, floor space is sacred, aisle space. And they took a quarter, a third of some of their stores and made them fulfillment. And it worked because the demand was there, right?
No, that's spot on, Jim. And I agree, Jeremy, 100%. We're members of some manufacturing associations. And in that regard, we're already, as early as this summer, we were seeing people talking about the rise of near sourcing for manufacturing, and about the redundancy and the disciplines around making sure you truly have multiple sources for your goods, and that one of them is close, even if it's higher cost. So we were seeing a lot of people head in that direction. So I think you're spot on that.
I think the opportunities are so great. There are so many of them, and they're so voluminous that the question is potentially dangerous to the independent shippers, right? Because they feel like they have to do everything. And so I think the answer is to just start small. Look in the warehouse. Do you have metrics, right? How are you, or do you actually know what your average cost per parcel is if if you're distributing a consistent or homogeneous parcel type, or per product or whatever? Like, just look at the very simple things and just build one thing at a time. Don't try to boil the ocean. I don't think we have to outsmart or be able to see the future. I think we just have to look at what is within our grasp today and make sure we're taking advantage of it. I think a lot of times we try to do too much and we miss the building blocks that are foundational.
Absolutely.
I'm going to double down on what Jeremy said. Most business is done in what I talk about as blocking and tackling. It's not about throwing the ball 60 yards down the field. It's about blocking and tackling. And he's spot on that. The principles that would have averted this disaster are the same principles that we all already know. Plan an alternate vendor or a series of them and keep them in play. Don't shut them down because your local rep told you that he'll save you an extra 1%. And the reality is that's part of the problem. People focusing on that extra 1% of margin shut down their alternate paths. They shut down their protective devices and then got themselves in big trouble. The people we found who survived this very well are people who focus on playing long games instead of playing short games. They're not looking for a quick buck. They're looking to do it the right way and be consistent over a long period of time. We're finding a lot of those guys have come out very well, and they kept the customers instead of losing them, like Jeremy was talking about. They kept those customers in play. They acquired new customers in the post Shipageddon churn that inevitably happened, and now they're growing into new heights. So I think that's crucial, is do the simple things that you already know are the right plays, but talk to your shareholders, talk to your board and say, hey, look, we know this is the right play. I know we could save an extra %, but that is not going to work for tomorrow. We've got to be ready for tomorrow.
Great points. Jim, what about you? What differences in strategy do you anticipate going forward?
I think you're going to have to be, nimble is a word that comes to mind for me. But once again, if you might give all your every day, it's pretty easy. You fill orders, and UPS, FedEx, and the Postal Service take it away. I think you need to have other strategies come November, and I would be looking for some trucking companies. You can do some zone skipping. You can bypass some of those gridlocks. I mean, the Postal Service had problems, and we were talking before the call. Philly was bad, and Cleveland was bad. Ohio in general was tough. Memphis was challenging. But, if you were in those markets, you could have put stuff on the road and went to Dallas directly, and bought some LTL space or even truckload if it's available. But, honestly, it's a tough time of year to get truckload, but, maybe not LTL, right? So, but I would that's diversify. I would think there, communicate, listen to your carriers, talk to them every day. Make them tell you what's going on, where their problems are, and let's try to get around some of those. But if you think you can just sit there and hand over thousands of packages and everything is going to be, wonderful, I don't think you're going to be successful. I think you're going to have to really be very proactive this peak period, and peak period is now. So it's great. It's no longer Black Friday and it starts now.
Well, that's right. I'd like to ask one more question of the group as we approach the conclusion. So, people always fight the last battle, right? After World War I, France built the Maginot Line so that the German tanks couldn't roll across the border. Only thing they forgot about was airplanes. And so, that was a supply chain strategy. So what are the things that people aren't thinking about now that they should be thinking about? In other words, what could be the next Shipageddon? And what's the preparation that smart shippers can take in order to anticipate that?
I'll start out on that one. I got an idea on that because I think Ben, you're absolutely right. Most of us fight the last battle, and the last battle is going to be about, hey, make sure you're multi-carrier, make sure you have software that allows you to relabel or rules engines as well as least cost routing activity. Make sure you have relationship with carriers. So that's the last battle. That's how you win that last battle. And I think everybody's got to come up to speed on that. But you can often look around and start hearing the echoes of the next battle. And with the Maginot Line, the French should have taken some clues. There were echoes of what the next battle would look like that they could have learned from. One of those things that we're seeing is unexpected manufacturing shutdowns and shortages. For example, automotive factories being shut down because of a lack of silicon chips, right? Yeah. That's an echo of the next battle, right? And so to me, that's, hey, in the future, what should I start to worry about? Critical items within my products are critical components of my supply chain that are the linchpin, that are the single link in the chain that's going to result in a catastrophic collapse of the entire supply chain. Another good example of that echo is that evergreen ship in the Suez Canal. That is a good example of, hey, now I can't get my blank, whatever that blank might be, and therefore I can't produce the widget that everyone loves for me to sell to. So that's what I think. We want to look at what's currently a small problem today that's easily manageable that could explode into a huge problem.
Yeah, I agree with everything Casey said, but I'm going to come at this from a different angle. Today, warehouse workers in Alabama are voting whether they're going to unionize one of Amazon's warehouses or not. And I think one of the biggest problems that are the last battle and the next battle is labor. The warehouse, the transition from Main Street into and U.S. manufacturing and everything else into just low-paid warehouse jobs has been brutal. It's been brutal on the workers. It's been brutal on the companies. The jobs are very difficult. Nobody really wants them. Historically, they've been paying terribly, and that is all changing, and it's changing so fast. And if companies don't take the perspective of investing in their workers, and I'm not just talking about paying them well or giving them good benefits, I'm talking about training so they can do more, so they can work alongside robots in sustainable ways. I think we're going to have crazy labor shortages on the delivery side of things, on the truck driver side of things. We're all hoping autonomous is going to, fill that on the warehouse and fulfillment. I mean, across the board, there just aren't enough bodies that are capable of doing the work and meeting the demand.
So automation, I mean, once again, I was going to, before you even talked about the labor issue, so I think there's going to be a real push towards automation because of the labor issue, right? Robotic and there's some pretty good technology development going on in the world of how you do pick and pack. And once again, there's robots, deliver walking packages upstairs and is it going to happen overnight? No, but that's, you're talking about echoes, right? And hearing what's going to go on in the future. I think that the labor is going to drive people. It's going to drive robotic process. It's going to drive automation. It's going to improve processes. And then finally, returns. We always forget about them until you get past peak and the Shipageddon is over, you think, and it's January, and you look over and you have 30 trailers in the yard of returns. The most sophisticated, I've seen sophisticated companies, retailers that do it really well. And then they're willing to take 10 cents on a dollar on the returns because they don't know how to deal with that stuff. And that is just a margin opportunity and a customer experience opportunity, maybe even more appointment. You got to get this better. I got a return for a big person, and I went to one of those drop places, and they were going to take care of it. There was 30 people online when I got there 2 days ago, and I just walked out. So that's not a good solution for me. But I once again, I think that it's going to continue to evolve. That's what we all know about supply chain, and e-commerce is going to continue to evolve. And so keep your eye, be future ready, as the term goes. Keep your eye on the future, because I think there's going to be opportunities that come out of that.
Great. We see those issues too. So, Jeremy, I'm going to give you the last word. Do what every author wants to do, which is tell us a little bit about your book and conclusions. Now, I bought your book, but for those of us that haven't, tell us what are the key takeaways, please.
Yeah. First, thank you for buying my book. If you liked it, please leave me a 5-star review. And if you didn't, please don't. So the key, the book is about the independent merchant and their efforts to compete against these companies that are so large that it's hard to fathom, right? Casey, you own warehouses. It's hard for guys like us to understand that Amazon puts up, up to $200 million in each new DC. Like, these are numbers that are just detached from reality. Singles Day in 2019, Alibaba shipped 1 billion packages in a day. Like, this gives these companies so much power, and they're using it to a large degree to suppress the independents. And so the book is my effort to put information out there to help the independents be able to compete and survive and thrive in this world that we're going into. And we talked about some of the takeaways on the call today, things like starting small, not trying to boil the ocean, investing in training in your labor force, things like that. But the easiest thing is on my website, which is just my name, jeremybodenhamer.com. I have a free shipping strategy assessment. So any independent merchant can go in there. It gives them it does an assessment of their shipping strategy and points out all the places where they can find improvement at low cost or low effort. So that's the biggest takeaway I'd share.
Excellent. Well, listen, gentlemen, this was a great discussion. So Casey, Jeremy, Jimmy, fantastic to speak with you. I hope you enjoyed the opportunity, as I know I did. And I look forward to the opportunity to share this with the many folks that I know will benefit from your insights on supply chain strategy.
Great.
Thank you.
Thank you, Ben. Thank you.
Thank you.
Thank you.
Enjoyed it.
With you.